What's up, everybody? Tom here with another video. We've got a great one today. We're going to be talking about the markets for the week ahead, including the stock markets, commodities markets, crypto markets, Tesla, Apple, and more. But what we saw last week was some cracks appearing in the markets. We saw the movement in the hedges. Gold, silver, DXY, all moving up. And now we've got everyone talking about inflation again. Will this cause the second dip and a new pullback in the markets? Or are we just making a whole lot of fuss about nothing? Stay tuned as the community and I try to figure it out together. Let's do it, guys. All right, guys. Well, what better place to start our market recap than talking about what happened on the Friday close? Here's the S&P 500 heat map. But before we start this video, I want to say a massive thank you that everyone got us to 70,000 subs. We managed to do it together, and that's thanks to you guys sharing the videos, liking the videos, and of course subscribing. And if you've been watching our videos for a while and you haven't subscribed, please click that button. It really does help us out if you enjoy the content. Let's talk about this, but first I just want to quickly mention Tesla, which we'll be talking about later. Obviously, Elon Musk selling stock wasn't really the most positive sign. We just had a 20-30% run up, even more, depending on where you picked up the position. And realistically, it's in consolidation at this stage. So we'll continue to cover it on this channel, but I believe we're in a bit of a consolidation period before what could be the next move up. And we'll talk about that soon. Let's go through the Dow Jones, S&P 500, Nasdaq, and Russell for the week. So we want to understand what was moving, what wasn't moving. And in general, every one of the indices was down. You can see here what happened. We started the week a little bit green, went red, went red, went red, and then slight rallies into the Friday close, which is a good sign, but maybe not as good as you think when we take a look at the markets and the TA that we're seeing. When we go and have a look at the sectors, though, this is what I talk about when I say there's markets within markets. If you've been investing in the gold, silver stocks at the moment, you would have been outperforming all of the other sectors. Everyone's very focused on the financial sector, the consumer staples, the technology, all of these types of ones. But what about some of the outliers? Obviously, the semiconductors have been a big standout coming into this week, the SMH sector. But we also have the solar sector, TAN, and of course the gold sector. Absolute outperformance last 2 weeks. Phenomenal trading there. Great breakouts on some stocks. And I really encourage people to think about sector rotation. It's something I talk about in our group mentoring classes. I really deep dive into it because I think it's one of the essences of making great trade decisions consistently every single year. So it was a pretty lackluster week in terms of many sectors. XLY, consumer discretionary, did the worst thanks to Tesla. And then we have IBB, the biotech sector, also showing a little bit of weakness with the energy, etc. We're still in earnings at the moment, so that means that we want to be paying attention and know if we're in a stock when those earnings are coming up. We have Walmart before the open Tuesday. That's a very notable one. SEA, of course, a big one that's shoppy. People love this thing. And then we also have Nvidia. This will be one of the biggest bits of news for the week. We'll be doing a live stream to cover it. Nvidia at the close, Cisco at the close. We've got Target. And we cannot forget the Chinese stocks, Baidu, Alibaba. How will they report? Will this Singles Day new sales reports coming out of Alibaba look good? Or is it going to continue to be one of those really scary stocks in the market? Well, let's get into the technical analysis, and we'll start off here by talking about a couple of the general indicators. Then we'll get into some of the tech stocks and some of the commodities. And of course, we'll go and end up with the indices in our discussion about the week ahead for the Nasdaq, S&P, and IWM Russell 2000. So we saw a spike in volatility. That spike took us to, what do you know, 20. Now, whenever you're trading the VIX, around 20 is where you really need to pay attention. 20 is kind of the area between the bulls and the bears where they fight each other. And I always find that this is the point where markets often stop first, and then they often pull back, and then they come back through. But remember, VIX traders, you need to be quick, you need to be fast in these markets, because when it spikes, it doesn't spike for that long traditionally. People got used to it spiking to 30, 40, 60 during the pandemic. That's very rare. And I think you need to have a set expectation when you're trading something like that. That's just really important because the roll costs can be brutal if you haven't gone through a roll cycle on the VIX before. Let's talk about the DXY here. One of the biggest hedge, if not the biggest hedge in the world against global uncertainty, the US dollar. Big breakout. Let's put this in perspective here for everyone that's new to the channel. We've got a massive double bottom pattern. We've talked about it now for oh wow, months, I guess. It's broken through. We got bullish on the DXY. It's finally showing its head. This is what weekly, monthly trading is. You're not going to be right every week. It's going to sit around and do nothing. But when you get those confirmations on a weekly, monthly chart, they're often correct. Remember, it's huge money flow that gets through these key resistances. And we've just seen another key resistance be broken. The weekly 200, this green line here. Take a look at this 200. Support, support, support. Phenomenal support for a long period of time. Support, support, bounced off it a lot. And when it breached it, look at this over here. It breached it over here. It then came back down, admittedly. But look, it began a multi-year, or at least a 1+ year strength in the US dollar. This is a big deal and a huge closure out here. 2050 cross has already happened many months ago. We talked about that. And when you break above here, this all becomes support areas. So we've got that 94.50 that will act as dollar support should it ever happen. We've got the 200 acting now as potential dynamic support. And we get a very strong picture that the US dollar might be strong here for multiple months. We may actually see it go to something like a 97 or a 98, which is a big move and a huge portion of participation due to the fact that the double bottom pattern kind of pinpoints itself there. If you have a look at the 20, it's moved quite far away from it. We scroll down through the smaller time frames and you'll notice the 2-hour 20, it's created a long leg doji there, kind of making its next decision move. If it closes below, what might happen this week? Some weakness in the dollar, and then hopefully some strength off those bounce levels. If it closes above, where next? You would have to think it continues that bullish move. And what we've seen is this hedge open up. The DXY has become really bullish, but at the same time, something unusual's happened. Gold has also gone up against the US dollar and other pairs. This is really weird. Like, to have a strong US dollar and to have a strong gold. Imagine how gold's going against other currency pairs. You know, a lot of people don't think about that. How's gold going against the odd, against the pound, against the euro? These are also tradable things in the markets. Always be thinking about which is the strongest currency, and if I believe in gold or silver, possibly I can make more money trading it against other currencies. You know, it's something that I guess big brain people in the community do here. And it's really cool when you start to think about the markets this way. It's that extra element. Most people just think gold, US dollar. But what about gold versus something else? Phenomenal stuff when you bring it in. Let's take a look here at the break. I'm so happy with this break. We've been talking about it for weeks. I'm just happy to see it finally happen. And for gold traders to be in some way vindicated for the hate they've been receiving. Bitcoin people have been giving them crap for months, and relatively so. I mean, a lot of people will look at this and they'll say, but Tom, of course I'm going to give gold traders crap. They've only gone up 5.79% from this low down here and maybe 10 from the bottom. That's nothing compared to Bitcoin. Yeah, I know that. But remember, a lot of gold traders are trading on leverage. They trade smaller portions. So this is a significant breakout for gold traders. And I think a lot of people forget that. Let's think about where the next level of participation goes to. Of course, the previous peak. Now we get that kind of strength that we feel like could be in gold. Let's have a look at the last couple of days. Strong rejection here. Very good bullish hammers closing out, and a level that we are anticipating should happen, plus a seasonal coming along with that. So we get a whole bunch of different supports, a whole bunch of different levels that we can start to break down. We get into things like the 4-hour. Look at this 4-hour 20. We speculated on this one as a 1, 2, 3 combo deal. It certainly was through the Friday session. Congrats to people that were trading that through the day trade. Did very well, and it's phenomenal stuff. Let's also take a look at the seasonal that's appearing here. So if you look at the last couple of years, if you're again new to the channel, you wouldn't be familiar with us covering this. We've talked about that November period being the catalyst into December for obviously being the low and then a little bit of a rally that's lasting. And this has happened now in 2020, in 2019, in 2018, in 2017, and even look at 2016, the middle of December, bam, rally. So phenomenal seasonal with a great breakout makes us very happy as technical analysts, and it makes us very happy as a community. I think congratulations to people that obviously have been looking at this. There's a lot of you guys sending me these charts. I'll give a shout out here to Ulrich. Ulrich's a member of our community and obviously a huge supporter of the live stream. And he found the silver trade. I'll admit, I didn't have this one on the chart. I always have this set up on the chart. But for some reason, I didn't have an alert. I only had the 2480. And he noticed this one. He tried sending it to me and I was just busy that day. And there's always another opportunity, which I think is what I wanted to get out of this. But this was an inverse head and shoulders. There's the left, there's the head, there's the right. You get left shoulder, head, right shoulder. You have confirmation straight into the peak. What a phenomenal trade. And then that, of course, has set up through the breakout, the recovery play here, the pullback, the bullish hammer, which we were all over last week. We were talking about this now for 2 weeks and we've been going crazy about it. The bullish hammer closeout, the movement up, and of course, the eventual break, which we've now seen above 2480. What does this lead into? Well, it leads into our bigger idea. Left shoulder, head, right shoulder. From the bigger perspective, you can ignore this wick candle due to how it formed. If you're trading, you would have realized that that was illiquidity at the point. So that's why it happened and it bounced so fast. And there is a chance here that we now move towards a $28 silver. So a lot of silver bugs will be going wild. This is a huge participation. We still have some fighting to do. We've got to get through that daily 200. It's no joke. It's caused some resistance before, so it's certainly a level. But people will be scaling into this. People will be thinking towards the bull side. And certainly on the weekly, the story is very phenomenal. Bullish hammer, follow through above all the moving averages. Great stuff here on the commodities. Now, other commodities that have been hot, but now in consolidation, we've got US oil. And I think the community has been behind this and really picking great zones. You know, 86, we've talked about it to death on this channel, how good that level was as a zone of resistance. We then see OPEC come in, do their little manipulation plays. We get consolidation in oil. And while I'm certainly not bearish on oil, I do think we're in a consolidatory period. And this means that we have to wait for the next breakout. If we get a breakout past 86, from a technical basis, we're looking towards that 92. So there's some great levels here. And oil has been phenomenal now ever since the pandemic. There's been great technical after great technical. We've been covering them here together. And this has been one of those strong plays. But we take a look at the weekly. Does this look like a chart right now that you're like, oh, wow, that looks super bullish? Not really. We've got long leg doji indecision, the high, the low. We've got weird indecision kind of candle here, and we've got a rejection style candle. We close above all of these. Guess what? Rally resumes. Very strong signs. But at this stage, we're neutralized on oil, and I want to bring it up in comparison because we've been bullish oil sometimes and very neutralized into silver and gold. And now we're going bullish from the technical analysis on silver and gold. And it just shows that you have to switch and constantly be thinking about this stuff. Let's move over to Tesla. A bit of a weak kind of close here on the Friday. 1,033. We did have a very strong put sitting on the stock around 1,000. It just went straight down there and then bounced off it. The sentiment seems to be off this at the moment, with the CEO selling it, with obviously many other people in terms of the directors selling portions as well. That will hurt sentiment for some time. And we know how Tesla works. Monster ramps followed by consolidatory periods. Monster ramp, consolidation. Monster ramp, consolidation. So unfortunately, I kind of feel like we're in consolidation. This doesn't mean an investor has to go, oh my goodness, I'm scared. I don't think the numbers showed that. The numbers showed some strength. But the question now becomes, do we fill this gap? Do we move all the way down, find our heavy support around this 890, 900 zone, and then bounce up? Do we actually get under this 1,000 over the next coming weeks? Let's go and have a look at the options to see if we have any idea what's going on. This is the expiries for the 19th of November. Now we look at this chart and you'll notice there's an outlier, 1,000. So this doesn't always happen, but technically speaking, we have $1,000 put that's massive. There's huge amounts of open orders sitting here in comparison to any other orders sitting around. And this is what we can call a put wall. Effectively, if the price comes down to this point and we believed it was a strong technical, let's say we had a resistance level, we broke through, we came down and we were roll reverse testing this, and this was a put wall level, 1K, this would be a phenomenal zone to be looking for that strength in the day trade. So $1,000 is certainly a point to watch. It's not quite as good as what I just drew there because we don't have that roll reversal, but we do have a key pivotal area to be watching at. $1,000, if it gets underneath, could really spell trouble for Tesla. If $1,000 holds, obviously should hold above that, see some day trade buying, should see some support, and hopefully some commanding buyers there. Apple continues to sit around 150. This thing is the 150 magnet, and it's still 150 magneting into the session. So this means that together we've really just said 150, 150, 150. We've now got the earnings out of the way, the dividends out of the way. From the weekly perspective, it still looks like quite a strong chart. I don't really feel strong or weak on this either way. I think it's more bullish than bearish, but if the Nasdaq turns around, Of course, Apple will struggle. And when we take a look at the options for the week ahead, again, the 19th of November here, expirations, they're all kind of sitting around that 150 to 160 range. Quite a lot of calls just floating around there, which Wall Street would prefer to expire worthless. So this week doesn't really looks neutral, I guess you would say, for Apple. We'll leave it there. Let's move over to the indices where things are getting exciting. We've got the Russell 2000. We've talked about the giant channel 2021 so far. You might as well have called it a wipe-off year for the Russell 2000. If you invested in this index, it sucked. Plain and simple, it sucked. It didn't do much, and you can see 2021 starts, kind of gets stuck into a big range, and then now we're finally closing out. We talked about this as a community. I still think there's a lot of strength here. Usually people take the distance of the channel, that becomes A, and then they extrapolate that out, it becomes B, and it hits that kind of 258, 260 zone. So that becomes a target during a seasonally strong time. We've already detailed October, November, and December tend to be very strong for the Russell. The smaller caps tend to get a lot of buying pressure into them, and that's a good seasonal event. And then we've got to ask ourselves the question, well, what's happening with S&P 500? What's happening with the Nasdaq? Well, they seem to be declining slightly, and that will push the Russell down. So we've got really a 50 exponential at the previous resistance here, and we've got a 20 exponential, the red line, at right on these resistances. So we've drawn a box here. And what I'm thinking is if the market continues to weaken, let's say it comes back down, this area here and this area here should be met by technical buyer demand. And that could be strong levels for you to day trade, scalp, look at, and then of course make your own decisions on. So these will be zones to watch. That 234, certainly a pivotal area for the Russell this week. Let's move over to the Nasdaq. We've got this one trapped very well as a community. I call these the community trend lines, the top and the bottom. You guys found them together with me. That's fantastic. We've done it. We've got this one, and we've been very, very accurate with using this, with using the breakout above, with using it as a resistance. It's all kind of playing the game. Now we ask ourselves the question, well, the rally on Friday, was that the real deal, or was it just a standard 2 steps down, 1 step up, 2 steps down? I'm still tending towards the 2 steps up, 2 steps down kind of thing, in terms of 2 steps down, 1 step up, I mean. And the reason why is because we usually do go and try to hit these 20 moving averages and 50 moving averages, especially after such a huge rally. While we're getting close to Thanksgiving, and I do understand that is traditionally a very strong week, we've still got this kind of limbo week here. The 12th of November, Seasonax said that was the bottom. That was kind of the low point from a statistical standpoint, but that's only stats. What we're looking at here is the TA. The TA hit the resistance, it's pulled back, it's had a bit of a rally. Do we now see that further weakness? I think the S&P 500 shows it a little bit better, but let's take a look on the 2 hour. So the 2 hour certainly doesn't look that weak. I mean, it's had a little bit of rally here, but we're at that 16.2 zone. And I think, again, when you come into the Nasdaq, sometimes it shows us great technicals, but the SPY or the S&P 500 can be the better index to find the overall market strength. I mean, this is 500 companies. It's not just the tech side. It shows us the overall market strength. Community trend line, again, hit, perfect hit, long leg doji, weakness ensued. 20 moving average at the 460, and around that 450 is where that 40, that 50 moving average is going to be. So it's right around that zone. So what if we have a scenario where it goes like this? Bit of bounce, hits the bottom, sells off, hits that. Imagine if we did this even just next week. That's very possible, and then we move back. We're still bullish into the back of the year. We still are seeing a lot of positive signs. People are super concerned about inflation. I understand, but that might be something that happens in 4 or 5 years in terms of becomes a super out of control problem. We've got to look at the now and think about what's the price action telling us, and is there real weakness here in the market? And when you go and take a look at the weekly, does that look like a market to you that's like, wow, this thing's going to crash? Not just yet. I mean, I'm not seeing crash signs here. I'm just not seeing that weakness. We've pulled back to the 20s so many times. We've bounced off that. You know, here we had the buy, here we had the buy, 2020. It's unlikely in a very strong seasonal period such as November, December to see these crashes. It's happened before. Of course, anything can happen, but it's unlikely. Let's take a look at the options to see if they can give us a bit of an idea. 440 strike. This is where we have the most amount of puts sitting, and a lot of kind of calls. The green one here is calls and puts floating all above that. So what this really tells us is when we're looking at the SPY, 440, let's say it does sell off this week, there should be buying demand around 440. All these puts are very unlikely to make any money this week. They're very unlikely. There's too many puts in the market. Look at all the puts here expiring. But we have that put wall sitting around that 440. So if we go back over to the SPY and we think, okay, where's the 440? And we put that in, it's super unlikely to come down here, yeah? No way it's getting down to that level. You would think not. But that is that previous kind of resistance support. So there's a lot of puts floating all around this area. And I think that kind of opens up this idea that the market could easily fall to these zones, but it's very unlikely this week, next week. The 440 continues to be a thing through the weeks that it could get underneath that zone. Let's take a look at the SPX and try to make sense of it here. So this is still the S&P 500, but obviously not the ETF version. We hit the R1, fantastic. The R1 and the trend line together, that gave us that weakness signal. What usually happens with markets though is they do like to come and touch our little blue line here. And the blue line is the pivots, the central pivots. These are the monthly ones. See how it likes to touch them? It loves the central pivot. It comes back and says, you know what, when we dip, we love the central pivot area. We're going to come in there. We're going to get that during the month. And then we're going to bounce off that area. Well, the central pivot's quite far behind. In fact, look at this. Where the 50 would be, where the previous resistance would be, is where that central pivot starts. So this is a zone that makes so much sense to me. The 20 is already a fantastic zone. It just makes sense to get back down here. And you might say, well, you're talking bearish here, Tom. I'm not talking very much bearish. I just think it makes sense. If it keeps running away too fast, it's very bad technically. And that's what we don't want to see in the market. So I quite like what we're having here. We've got that central pivot. We've got the idea of the resistance. At this stage, we're looking a little bit weaker than positive, but that doesn't mean that investors should be scared or anything like that. There's no signs on the weekly or anything to show it yet. It's just been strong price action and more weakness towards little dips or small pullbacks into what makes sense traditionally through every single normal month in the markets. Let's move over to the crypto markets before we do the news for the week ahead. We've got here, of course, Bitcoin floating off that previous resistance high, has become support. We've seen plenty of buying happening around the 64K zone. Any closure underneath 64K and this 20 moving average on the daily will be a big deal towards the bears. They've probably got control of the market then, and you may see that kind of seasonal 20-30% crash pull back on Bitcoin. That really could be the trigger. Look how often this has been a buy zone in recent kind of weeks. And if that doesn't happen and it keeps buying off this and we get a new high, well, you better watch out because 70K is coming. And I think 75, 78, we've got some serious potential here in Bitcoin for the end of the year. A lot of people are calling 100,000 plus. I don't technically disagree with them. I think it's actually very possible. We've had Ethereum moving up very strongly here. We can see the trend line, but even this one is starting to weaken a little bit. Look at this price action. Does that look like the price action of super strength anymore? Every other time, create a little bit of a flag, bam, let's go. Create a downtrend, bam, let's go. This time round, what are we doing? We're making a series of lower peaks. We're kind of like in a little symmetrical here, waiting for the next decision. So I think we'll get that over the next 24 hours and we'll find out whether this crypto market wants to go more bullish or whether this thing wants to have a little bit of a pullback before hopefully what's going to be a fantastic year end. News ahead, not that much. This week's pretty good. Tuesday, 8:30 a.m. ET, so obviously New York time. We've got retail sales and core retail sales. Then we've got a bunch of news coming out of some other countries. And in general, the market will be left to its earnings. It'll be left to, obviously, whatever's going on with the government stuff and just nothing really else. I mean, we're going to see the technicals play out this week. And I'm excited ahead of what's going to be an interesting one. Then we've got the big Thanksgiving weeks coming up, a very bullish period of time for the markets traditionally. And it will be great. If you enjoyed the video, please remember to subscribe, smash that like button, guys. And again, thank you so much for getting us to 70,000. You guys rock, and it's because of you we got here. Thanks so much.